Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 11th of December. I'm Daniel Lam, your host for the podcast. It was risk-on post the FOMC overnight. As widely expected, the Fed cut policy rates by 25 basis points. The FOMC's dot plot is indicating one more reduction in 2026 and another in 2027. There's still disagreement from members about where rates should be heading. However, at the press conference, Fed Chair Powell began discussing productivity growth, downward inflation ex-tariffs, and labor market softness, dovish comments that fueled market risk appetite. So the market was reassured by his confidence that core inflation was trending downwards. This is in contrast to the concerns Powell raised at the last press conference on future FOMC cuts. The Fed also eliminated the limit on aggregate standing repo operations and added $40 billion of Treasury bill purchases. So this means unlimited funding in the event of a money market squeeze. This would provide a backstop to risky assets should any potential Supreme Court tariff decision reduces tariff revenues and raises fiscal fears in markets. Risky assets reacted well to the FOMC meeting. US dollar weakened, with DXY going below the 99 level and technically turning bearish after a prolonged range-bounding period since the third quarter of this year. S&P 500 is once again testing key resistance at 6,920, reached at the end of October. US 10-year Treasury yield broke the upward channel that was in place this month, opening its way to test the 4% level. All in all, this FOMC lends tailwind to US equities, and it is setting the stage for a year-end rally. We still like the US technology stocks, but of course, like we talked about in a podcast last Thursday, investors should be selective in picking the ones with strong free cash flow and less or little reliance on debt in order to finance for their AI investments. That's all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.